Alrighty, welcome in Blue Sky Traders. It is your coach here, Blue Sky Breezy, starting out the same way we always do. Hope everybody had a good day in the markets. I'm going to kind of take a step back a little bit. I want to go over Friday first, and I kind of want to break Friday down from a structural perspective. It was a massive day, almost 5% potential circuit breaker on the NASDAQ, which I want to discuss a little bit more of that because the relevance of the NASDAQ comparable to the S&P 500, when you're thinking circuit breaker, it's generally going to be triggered when the S&P 500 hits that threshold. So it would have been interesting to see what would happen. But let's get into some technical analysis on Friday. And we had a lot of TA in this area within these chop zones. Coming back to May 27th, we had a clear resistance area. That same format I was mentioning, to where like you would have these areas that were resistance, come back, test support. That was the general market trend. Every single day for so long, you had minor resistance turn major support into continuation. And that's just how the market dynamics were flowing. And then you come into Friday, you had a few variables that kind of come into play for that downside, right? I know it's been talked about. You had the Broadcom dynamic that kind of shifted the AI trade a little bit. And then you had the Fed print that came out for the jobs report, right? I don't want to dive too deep into that. I know Matt's probably done a very, very good job of breaking that down numerous times. But from a technical perspective, what happened? And it's very clear to see like where price was stable in this environment. You could see these areas and these wicks occurring. And I'm just going to go ahead and remove everything so we can see it clear as day. Like you had numerous opportunities within this range, right? Secondary test here, secondary test there. You had this variable here that kind of confirmed. Let me put a box on it. That confirmed the dynamics that I'm talking about. Like you had resistance, turn support. You had resistance, turn support, and continuation. Like that's been the overall trend. Here, this story changed. It changed very early into Friday. You had the overnight kind of sell off that put us into this range. The market was already down about 1.3% at the open. Typically, when you see that form of extensive move, you don't expect extreme continuation, especially in bullish conditions. So, where was that number that really caused a big flip in the market? Well, it had to be the swing high nearing 30K. And I'm kind of going to break down my personal day and what it looked like on Friday. Coming into, let me get to a 15-minute chart real quick. So coming into Friday, I had an opinion of we had such a measured move coming down from Thursday into the Friday open that we would kind of see a repeat of what's occurred, right? And when we approached this area here that was like a triple bottom, I went into the trade. I'm thinking, okay, this is going to be a fresh as best set. It's going to be an equal low environment. We're going to have a good opportunity to probably inverse this move 1%, right? That's what my brain was thinking. It was thinking that I put on some heavy size into trades. And when we cleared 30K, I took my L. I took my loss. It was a pretty big loss. It was around 12 grand loss on that trade. When we broke 30K, and I'm going to go to a 4-hour chart. When we broke 30K, mentally, my permeable mindset had to shift. Like it had to shift. I knew this trend was so strong. I did not think it was going to continue and produce the way it did. But I knew, like, okay, I'm not going to fight this. I'm going to wait for a candle close, a retest, and try to get in. So when we got this retest nearing 30K and I saw that fell, I jumped in. I'm not holding trades in a red day with the intent to get green. That is typically how you take a minor day and turn it into the worst day of your trading career, right? I'm just trying to take high probability sets, get something back from the market. Like I accepted I had the initial wrong bias. I saw the trend was strong, so I flipped it, right? And I did write it down. I made back about 6K, was still negative 6K on the day. And when this candle printed, I'm out of the trade. What is just mind blowing is you look at these candle ranges, you could just say from 30K, well, the next closure of that 4 hour candle was almost 600 points lower. When that candle closed, we almost printed from 29,500 down to 28,790. So that continuation was mind blowing from the Bears, right? And then you come into the overnight session Sunday. When you get this form of steep selling, you kind of expect a little bit of relief. Now, whether that be a relief um, for the Bears to be able to sell higher or for the Bulls to be able to get a good dip buy, we'll find out this week. So, where does that put us now? What I'm looking at now, me and Justin were just talking about it. I feel like tonight could be simplistic. Like, I feel like it could be a very simplistic bear flag. The only issue, which it's kind of started to print in the areas that I would like it to print, the only issue is you have a well defined range from the intraday price. You have VWAP right here, you have the trend line. When I first jumped on, it was kind of hugging it. I would like to think it's making a decisive move to the downside, but you have a lot of obstacles along the way. You have a couple swing lows here, really, really tight together that could reverse price. So when I think about the overall trend, we know the market uptrend is precedent, right? Like you always want to factor in the larger time frame rallies, but you also have to quantify relevant price. Relevant price takes precedent over general trend. That is the priority. So it's no question that we're in a downtrend, right? Until you have some form of sequence, you've now formed a lower high. Until this lower high breaks, or some form of structure is reclaimed, like a close above this base here, like you have to assume the market's going to go down more, right? So I think we're looking for bearish continuation of the break of this trend. Just some issues and hurdles along the way is yes, you have some relevant swings that could really prevent this and turn this into, say, an equal low environment, right? So there is short term confirmation, but you got some stuff that's going to prevent this. Like this could easily become a clear double bottom and rip back up, right? So we need to see what price wants to do there. And I feel like probability leans to the downside. It's just we're right at support, right? We are going to most likely take a short on that. As I always do, I want to cover gold. Gold, we've been trading in this range, these levels you see. Friday, it dipped about 200 points, and it really broke all relevant structure. You can even go to the 4 hour on gold, and you have price, right? But price is dating back to March. So it's not as relevant as everything we were playing in this range. So it's not that you're playing the unknown, but you need a little bit more confirmation when you're playing historic levels, right? You start to look, you start to wonder what's going to hold. What I did on gold today, and what I'm looking for basically is I did the top down approach. Like I went to the quarterly, marked out two areas, the next two quarterly lows, which these are very far away. It's 4163, 40-40 basically, right? These are going to be the highest probability areas for a reversal. You come down to the monthly. The monthly, where price stops today, the monthly most relevant monthly area is this wick here. It's right at 4296.8. You think about where price stopped today and where it reversed at. Well, it reversed right at that monthly area. So I have a feeling like gold has potential to rebound, but it's mega bearish. And then you're kind of basing it off of an area that bounced this morning. And it's ugly within this mix. So I think gold has potential to bounces, but we need extreme confirmation on gold. Because if not, I think it's a pretty easy sell. Before the equity market's been selling, gold has been unstable, excuse me. So I think it's probably going to sell downwards. And that's kind of the relevance of kind of what I'm looking at before we hop in a trade. So the equity market went up today. And I did want to cover this because I want to highlight what YM or the Dow did, right? Yeah, the price at the end of the day for the equity market slid down. But if you look at the Dow, it had one opening pop and then it sold off all day. You look at small caps, it did basically the exact same thing. You had good continuation, sold off all day. So I would like to assume now that we're looking at hedges in the market that you can kind of see the flip flop of currency going on between these equities and the individuals, the indexes and the individual holdings within it. It's good information to know because we need to know where the money is flowing. And this is where me and Justin were talking. We were talking at 4:30, and then damn, this is an intentful candle. I'm just gonna chase. To be honest, I think it has potential to reverse, but I do not want to be the one calling this as a reversal, considering this this intentful move. I would say it's extended. We're down 100 points, but we're gonna see. We're gonna see if my thesis is correct on that bear trend breaking. It's already broken for 100 points, so that's kind of the issue. Right into an equal low is tough. Tough. I'm gonna get in here and I'm gonna expect some drawdown. Probably up until like VWAP, to be honest, 408. We can get a clean structural retest of VWAP. I feel like that's probably going to be your high probability entry. But we'll see. We'll try to layer into this. Hello, everybody out there in YouTube. Welcome in. Welcome in, guys. You guys have anything for me to cover, go over? Feel free to pop it in the chat. Got a new dog. We had a poodle running down our street and stopped at our home, and man, I think you could tell it's been outside for a very long time. So we took it in, got it cleaned up today. So we saved a life. And it's so sweet. It's just chilling under my chair right now. Yeah, damn. Let's see, it looking like an equal low. Probably back to VWAP. So I want to size into 5, so I'm okay with the bounce. I am going to layer in. And then if it clears VWAP, still got to fight this trend ahead up above. So we'll see. All right. I'm in 4 cons. I'm going to kind of hold tight for now because there is, high probability we go to VWAP. My entry is basically 370. And I do I do feel like gold is going to end up being another easy short. It's also forming an inverse head and shoulders, but every pattern it has for, man, it hasn't respected that pattern at all. I do want to be careful on gold though. It should be a hedge against the market. Definitely hasn't been, um, but has the potential to be any time it wants to be. Right? What's that? About 10 point upside on gold. Right at VWAP, I would feel a little more comfortable in that short. Looking at a higher low, potential, higher low. So I think it's setting up. It's just very, very hard to trust. And we got 20 points already on the short side. I am debating on, I think we need to be careful in this area. We would love to see candle close under this area and kind of end this conversation on if this area is going to be an equal low, right? But and really until it closes under 350, 29, 350, I think you have to be paranoid in these shorts. When it closes under, I think you can be a little more confident. If it does close, which it's really, really struggling to do here, if it does, I think we see another 25 points back to 29, 330, basically. So if you did what I did, hey, we got 20 points already. No harm in kind of de-risking either. This is pretty high risk. And if we can get a close under 350, I'm probably going to add into the position, which you would not need to do that. And I'm going to try to get into the size with the confirmation. And one thing you don't want to see are these type of wicks at support. We definitely need to close under these wicks. Talk about risk management. Ked, I would love to know. There's a lot that goes into risk management. So where would you like me to begin? Would be the best question. All right, team, we got to crack at that 350, $200, 4 micros. Lock something in if you want. That's some bread right there. Man, with only four too, but it's okay. $250, 30 points. We'll see. I definitely don't want to give this back at all. So what kind of, well, I took one off there on accident. Yeah, price does not want to stay under that 350 cleanly. Good trade there. We saw 40 points, I guess, 30, 40 points on that one. Kat, if you can just let me know which way you want to go about risk because risk management is a kind of layered conversation. And team that hit me took out a secondary one there as well for 40 points. We're gonna move this bad boy down here, 50-point trim. This is a very critical area here at the 330s I mentioned. We got to we got to 330 exactly. So If it were to reverse, makes sense. I wouldn't, if I'm in this trade, you want to put a stop, like you could put your stop and then really keep that stop above about 350 to not give back 20 points. Um, it's probably what I would do logically. This is almost a free trade at this point. Unless we just, the market's crazy. We could absolutely see a random 50-point candle. But I'm going to assume with that 350 break, this swing low here, you got some wicks at 330. I mentioned that's the next target to close under. And if it can close under, I expect us to get our 50 points. I mean, Kat, I can. I need some info. I mean, I can just kind of run with whatever, but like what about risk management? Play size, for example. If I'm thinking prop firms, I'm thinking the most important thing is sizing. That's the first and foremost thing about prop firms and really any trading, like whether it be your cash account, doesn't matter what you're trading. Your sizing is going to dictate the trading mindset and environment you're in. If you only have $2,000 drawdown, you can't trade minis, right? You cannot be an NQ because one trade typical drawdown gonna be 300 bucks. Like that's not even saying your trade is incorrect. That's just normal drawdown within the trade, right? Well, that's 10 to 15% of your entire account. So if you're trading minis, you can't trade minis, right? That's an account killer if I'm thinking logically perspective. The inverse to that is if you're in minis and it works out on a funded, you can really scale it, right? But when I'm thinking long term effective, like your sizing is the most important aspect in trading, in prop firm trading, to where my max threshold, and I've mentioned this, is going to be 7 micros. When I exceed 7 micros, my trading isn't the same. And why is it not the same? It's because the profit and loss definitions are almost the same as being in a mini. It's not that big of a difference. So for me, I start with sizing. And then secondary to that, and if you've been with me, and this thing has potential to reverse from that 330 I mentioned, team. So if you move your stop to 350, really good trade. I'm going to give it some room. I'm going to see what it does. It gave up this equal low at 350, but it respected this one pretty heavily. So we'll see. We'll give it some room and see what it did, but we saw 40 contracts there. But Kat, I would say when you have your sizing down, the next thing needs to be, why am I in a trade? Right? Like why am I taking this trade? If you don't have some form of logic behind it, you can never be in that trade. That's where your average trader fails. You're in a trade because you're emotional, you feel like you're missing out, you really want to get out there and make money, right? But not every day is going to be a trade day. Not every range is going to be a trade range. You need a justifiable reason to be in the trade. So, how did we just make money on our current trade? Um, which is pretty extended, but how did we make money? So I will break that down. You look at structure, you should always be identifying a few things, as I mentioned, and kind of why I always start out doing a market recap. We need to understand the technical personality of the market, right? What type of environment are we going to be trading in when we're in the market? It's not unknown looking left that we are in one of the most insane bullish markets. Man, I can only think of like the COVID rally. You kind of had the housing market recovery. Wasn't as volatile, but very consistent. Like you had the tariff pump The recovery of that was just mind-boggling in the short term. This one is just equally insane as like one of the most historic uptrends in the market, right? Like we know that. Short-term environment, clear downtrend, right? If I remove all the noise to the left, clear downtrend. When you look at where price halted, you have, basics, the core basics of the market. Where did support hold, right? It created a fresh pivot. There may be something important to the left that we're just not even quantifying, we're not observant of, right? There may be a logical reason why price stopped exactly where it did. Same here within this swing low, right? So in this minor picture, you're in an uptrend, right? You have 3 points of clean contact. You're in a short-term uptrend, but you've reached a critical compression point of the market, right? You've reached what was a downtrend, what is an uptrend, into a mass compression where price has to pick a side. So what is my justification for being in the short? Well, it's the relevant price. It's the fact that this trend, this line that I'm saying is the justifiable area for longs, it's broken, right? So that's the reason for the trade bias. That sounds like you're quantifying technical analysis, but you're quantifying entry logic. When you quantify entry logic, you're quantifying known risk parameters, right? This is an extended answer, and risk is a multi-layered conversation, right? But when I think of the market and I think of getting into a trade, risk is the only thing that matters. It's not about how much am I willing to make, right? That variable can be known, but it's typically unknown. Every single trade you ever take, the simple question is always going to be why and where am I in the trade? And most importantly, where am I willing to admit that I'm incorrect? If you don't use that lens to enter a trade, you're not putting probability on your side, right? And there's so many different things when you're looking at the chart that are important, but nothing is more important than why am I in a trade? When this trade doesn't work, where am I exiting this trade? Like no conditions, no emotions, no psychological if, ands, or buts. Where is the reason? Where am I exiting when it goes against me, right? For me, we talked about VWAP before I went into this trade. Yeah, it's some drawdown. I'm in with 4 micros. It probably would have been $300 loss, right? But I know that that's my area. If I'm short under this crazy candle, we caught a really good retest at this base. And it, just to pause for a second, it just missed my PT by peanuts here. That's insane. Missed it by a point there for the full 50 points. But like that's the type of logic you need to put risk on your side. If you're just in the middle of nowhere and you're just entering a trade without some of those variables, and if you're struggling to put that piece of the puzzle together, it takes time. That's the only thing. I know everybody who's trading a prop firm knows technical analysis. You know the basics of the market. You just have to apply it. That is where most people fail. They fail in the application state of applying things that you've been educated on. And it's generally just not slowing down. You're not slowing down enough to be able to apply everything you know. The market's going nowhere. It'll be here forever. And team, that's 50 points there. Really good spike down as well. So we got 60 points here. Wrap it up. 30 minutes, 60 points, $125 a contract. Wrap it up. That's a wrap. little dicey in here. Came back to the entry. This area now, 370 range, seems to be pretty critical. This swing low right here. In the larger scheme of things, we were looking at these swing lows. You got to think about the swing highs as well. So it stopped right where it should. Yeah, yeah, Ken. I'm okay with trading minis when you build a buffer, and that's just me. Like I'm a coach at a prop firm. Our main goal is to help you be successful. That's it. You can lose a crap ton of money using minis. You can make a crap ton of money. You have to build that confidence and that buffer to support the mini. Simple as that. Um, you want the quick money, just get that habit out of your mind. Trading is about longevity. And when you build a plan, for me, and I'll just talk about my experience. You know, if you've been with me, you know, I've talked about it numerous times. Like my plan when I got into the market, I was thinking, okay, I got a board, I got a vision board, which I think is really beneficial um, towards your goals. Like I feel like you get a vision board, you write it down. It is much more beneficial than just thinking about it or typing it. But I put a 10-year plan for what I envision I can make happen in the market, right? That came down to a budgeting perspective, how much I'm going to dollar cost average, how much I'm going to risk trading, how much are going towards bills. Like, what is a conservative, realistic opportunity for me to hit X amount? Well, it took about a decade on paper, and I was able to make that happen in 5 years. So if you can think about trading as a long-term startup business that you want to grow into the future, you don't got to rush it at all. You need to size gradually, size accordingly, define your edge. And I think the most definable thing about an edge is why am I in a trade? Where am I exiting when it goes against me? Um, I hope that answers some of your questions. I know it was kind of like a blanket risk management question. There's so much that goes into risk, but if you can apply those variables, proper sizing, reason to be in a trade, reason to exit a trade, I promise you through time, you will be profitable. Um, that's for me, in my experience, what I found to be the most important things that are non negotiable. All right. Let's look left. See this wick? This is a 30-point bounce. One thing I'm not going to do is I'm not going to flip my bias. We're already done. If you took this short with me, we made bank. We're done. Like, there's no need to try to flip and give it back. That was a really, really good trade. We caught about 60, 70 points on that trade. No reason to flip back to a different set. And gold went back above VWAP, so I'm glad we didn't. Well, it went. That's the hourly VWAP. Never mind. I don't think gold did. All right, gold just kind of chilled. So could have caught 6 points on gold. And we will give maybe 4 points from now on gold. We look to get into a short on gold. But what is here? I know I'm kind of bouncing around because I see this structure here, but this doesn't look like much. And how you know when you look at structure, you expect, say, swing lows or swing highs to hold. None of these held, right? Like none of these highs, what could have been resistance turned support. No, it gave them up. You have a couple candles here, but I think we see lower. Like we're gonna need to test some of these larger structures. I used to trade order flow. I used to trade cumulative delta. I don't need to anymore. I'm not saying it's a crutch. I think it's a co-pilot. But for me, I've been doing this for, you know, I think 3 months from now will be 20 years officially. And when I think about price and organic price, like I don't need to rely on, I'm not going to say manipulative volume tools because there's depth in, say, time price opportunity. You have order books that are true for a lot of things, right? You have cumulative delta flips that are very real. I use volume profile. I think for me through time, that's like the most respected thing is volume at price. That's something I just personally love. But when I look at what price is telling me and the reason we went into the trade, like I don't need volume tools to like confirm it, if that makes sense. I talked about this last week. The longer you're in the market, you'll see I don't even keep volume anything. Like I don't have volume bars. I no longer trade delta. I don't keep anything up. And even when I'm trading the volume profile, I remove the profile. I don't care about the pattern it's making. You know, I might look at it from a larger perspective, but I don't care. I care about the point of control and the levels, and the reaction at those levels. I don't need order flow to really tell me this is bearish. Like I don't. Um, you look at the price confirmation it gave, rejecting VWAP, rejecting this potential bear flag break. That's personally as a trader all I need. Everything is in the candles, right? If you're approaching an area that has a crap ton of volume and it reverses, there's not going to be one reason. And what I mean by that, the order flow is not going to be the only reason. I'm sure if you have your TA done properly, you can look far left and it's going to give you a justifiable reason why it's bouncing there. That is my belief in the market, is what happened in the past, that happens in the present, right? Like this happened in the past. I'm sure you could look back even further. Probably not here, not this example, but like here, what happened here happened in the past, happened in the present, happened in the future, right? It's not random. So like, do I need to know the order flow and the volume areas here? Not really. If I had the TA done properly, I probably expect a bounce there. Um, you know, so for me, I like to keep it clean, naked as possible on the chart, and that's just kind of my edge. But again, not saying it's a crutch. I traded TPO, traded market profile for probably a good 5 years. And then I kind of learned like the alphabet trading sequences it would produce. I'm like, bro, these are producing it at monthly levels or quarterly sequences, right? So I'm like, okay, comparable to looking at this, it's not as confusing, but it's not as clean. I'm just going to wait for confirmation of a candle to really produce there. And then that's kind of my bread and butter is candle reactions, confirmation, risk parameters, and that's it. It's worked out. Blaskinator, what's up, baby? What's up, Blask? Hope you're doing good, man. I got some fresh Pokemon from Target today. Please do not tell my wife. Yeah, gold is just gave us the wick back up there. Feel like we're chasing a little bit on gold. The only reason I know we see the pattern, we discuss this, like could be it's ugly, super ugly, but could just be an inverse head and shoulders. Forgot what Justin calls it, but like the smiley face pattern as well. So it could be a long, but man, I'm not trusting long and gold the way it cracked 4,500. Like super important area. The way it just straight up smacked it and died. I'm calming down on jumping, being permeable on gold, for sure. I think it's a much easier sell. This is a long structure. Is the thing. If we can get above VWAP, which is right where I have that level, 43, 48.7, I think it's got a good long potential. But until then, it's most likely a short. You would love to see 43.38 break to confirm it, which I will be keeping an eye on this, but we would love to get some confirmation, break and retest, continuation to the low. And then you guys always hear me talk about the institutional wicks at the key areas. That's what this is. This is a secondary retest. If we can get some confirmation of consolidation around, you could say 4,300, which is that monthly area, that monthly wick that I showed right here. It's dating back to December of last year. If we can get some consolidation and curl, I will feel much more comfortable on gold. For now, it did such a steep bounce. From that area, it bounced off of two wicks, right? Is most likely pending liquidity in these areas. We want to see price stabilization at that area and then potential to get a really, really good secondary long from that area. Ricky Smith, hit up support, brother. Hit up support. Hit up support. I think Tick Blaze definitely has potential. That's what I'll say. When I first got my hands on it, I liked it. There's work to be done. We're aware of that work that needs to be done. It was brought up in our last meeting. Um, our expectations are higher. It's been communicated. They will get it ironed out. I don't know what that phase is. I know Amaro has been out there fighting in the trenches with their customer support. So give us some time. I personally like the platform. I think aesthetically, much better than TradingView. I didn't have issues with the orders either. I know there's bugs out there I was impacted by a few, but nothing like the things I've seen. So I don't know if I'm lucky. It's my PC or what. But it will be out there. Hit up support, brother. I think aesthetically, long term, they become one of the best out there. And the web is what I was using. I did get on the desktop. The desktop is mind boggling with all the things you can do, which is good. Like people do that, they code it, they implement. We're looking at things like automated trading and different bots and the possibilities of what you can do. Um, and like Blue Sky, we're one of the most lenient prop firms out there. So I think long term, that relationship is actually going to be very, very beneficial for you as a trader. Some kinks to work through, just like anything else in life. Um, but I have long term, I think it's going to be super beneficial to every Blue Sky trader. Yeah, Ricky, just hit up our support. You can hit up their support as well, or reach out to Amaro and see if you got any resolution as well. All I can tell you is I ain't the man. Wish I could help you, brother, but I can't. I'm just here to make you some money. And brother, I hope you made some money tonight. We caught 70 points in total. So I hope you caught some lunch money, some dinner. Hope you paid a light bill or a phone bill with some of that. So love it, brother. Love it. Now we are back to 350. That this area here, 327. Same thing we were saying about the 350. It's gonna have to close under that range. Like for any more bearish continuation, it's gonna have to close under. 3 minute chart had an opportunity. Big reversal here, really confirmation that they want to hold this area as support. So hard for me to be bullish here. Like if I were to go long, that would have been a logical spot. But I still think you don't have protection um, of the overall downtrend here, right? It's good for a risky entry, right? Like there's a lot of data that's supporting this entry, but that's not your confirmation. You got to, when you're in this type of bearish downtrend, you got to start thinking secondary acceptance, right? You have confirmation this is support, but where is the acceptance of support going to be? It's probably going to be above VWAP. That's got to be the first test of bulls coming in. They're not, you can see what price is doing. They're not being the first ones to jump into this. Probably going to have to be above VWAP, which is like currently at 380, so 60 points away, right? Then if y'all are out there, made some money with your boy tonight, post it in the P&L channel in Discord, please. I've spent the time, organized Discord, and I would love some feedback. If you guys want to see anything else in there, I'm not done with the full restructure of it. I think it's a lot cleaner. I've implemented two new channels, and both of them are being used the way they should be. So that's really, really good. And what I'm thinking is I want to implement like a trade of the day channel or some form of like trade recap. The only issue with that is you don't want to get like a lot of chatter in those channels. Kind of just like a clean image, your best trade of the day or your worst trade of the day. That me, the coaches, we could kind of analyze and break down and give you advice on. Like I'm always thinking of ways I can help. And I always mention it like, hey, if you guys need help, reach out. And a lot of people are really shy to reach out directly. And I'm thinking like a trade recap, trade of the day type of channel where you can post your trade, whether it be winning or lose, like that would be a really good resource for us to help you guys. I'm open to any and all feedback though. Yep. Doesn't look like it wants to break that area. I see the rejection of VWAP, so I'm hanging on, but we may get some consolidation down here now. Brother, 29,200 isn't enough. Like you got these areas. What is this here? 287. If it gives away 287, you're back in this range. It's a very wide range. Like very. So I think if it reclaims under 287, got some structure 233, and this is on a 3 minute. We'll get the picture a little more clear, at least go to a 15. Yeah, I mean, it breaks 287. Same thing, it's on the 15 here. 233 gives. Then 143, so about a 100-point swing low, which has shown really good bounces from that area. 29.74, like relevant price has got some range to it lower. So, and yeah, I mean, this is bearish as shit, and this is coming from a permable. You got to respect what price is telling you. And I'm humble enough as a trader, like I talked about Friday, and that 30K swap, 30K, it hasn't been the biggest number in my opinion, or at least it didn't react the way I expected it to. But man, like I've made so much easy money. Market opens, you get a nice little dip and rip, right? Or rip and then dip. Then you get that secondary entry. Like it's been bread and butter. And I tried it, didn't work, right? I'm humble enough to flip my bias and understand that those market dynamics, although it may be short term, have switched. Um, and nothing yet has changed to kind of switch this environment at all. Um, Keep an eye on Iran and Israel. I don't know if you guys saw that news. Looks like Israel validated the ceasefire. Trump trying to step in. Things may escalate there. I don't think the market cares as much as it did, but when you think you're out of the woods from random tweets from the geopolitical environment, just know you're not at all. Like it could still happen. So when I factor that in with relevant price, really no relevant earnings coming out. I haven't done full due diligence on that, but I'm not aware of anything that's just going to pique my interest or potential to even reverse everything. The only thing that can reverse is too many people get in short trying to chase Friday's move, and then they just kind of rip and destroy everybody like they always do. And that will occur. Like, even if we get clean downtrend for a while, people will over leverage short, and that will occur. Um, but until we see some of those variables, relevant price, current trend is your friend, and I think it's bearish right now for sure. And team, that is the Asia stream. Really good stream, man. We've been on fire, to be honest, on the night stream. So good entry, good logical entry, good conversation about risk. You guys take anything from this stream or just my trading in general, have a reason to be in the trade, have a reason to exit the trade, size accordingly in that environment, you'll be just fine. Just fine. And for now, it is loving. It is loving this area. Now, I know there's more to the left. That's the reason we put that level. For now, it's really, really saying, okay, this is the freshest, best double bottom. Um, as always, guys, appreciate you spending time with me. Most important thing, I always leave it with, if you got somebody you love, man, let them know. Let them know life is short. Appreciate you all. Peace.